I'm sure you're thinking about how to grow your money. You've heard about investing. You've seen people talk about it. But you have questions. How does investing actually work? What's the best way to start? How do you invest without losing money? And most importantly, how do you invest in a way that actually makes you rich? If you've ever wondered about any of this, congratulations, because most people never even think about investing. Most people spend their entire lives working for money, but never learn how to make money work for them. But here you are. And that means you're already ahead of 90% of the world. Now let's be honest, investing sounds complicated. People throw around big words like bull market, bear market, short selling, options trading, hedge funds, derivatives. It feels like you need to be an expert in finance just to get started. And because of that, most people never start. They say, I don't have time to study the stock market. I don't know what to invest in. Investing is too risky. I don't have enough money to invest. And so they do nothing. And 30, 40, 50 years go by, and they regret it. But here's the good news. Investing doesn't have to be complicated. In fact, the best investing strategy is one of the simplest strategies ever. And it comes from one of the richest men in the world, a man worth over $130 billion, a man who started investing at age 11, a man who built his fortune entirely through long-term investing, and his name is Warren Buffett. Before we talk about Buffett's advice, we need to understand something very important. Most people fail at investing. They try to get rich quickly, they follow hype stocks, they make emotional decisions, and in the end, they lose money. But why? Because they treat investing like a casino. They buy and sell stocks like lottery tickets. They listen to social media influencers telling them to buy this hot stock. And they don't realize that even professional investors can't predict the market. Here's the truth. Over 90% of professional investors, the ones who work on Wall Street, have fancy degrees, and use high-tech models, fail to beat the S&P 500 over the long term. Let that sink in. If the so-called experts can't consistently pick winning stocks, what makes you think that you can? The truth is, trying to pick stocks is like trying to predict the future, and no one can predict the future. So what's the solution? It's simple. Stop trying to pick stocks. Instead, own the entire market, and that's where Buffett's advice comes in. Now, before we talk about Buffett's one piece of advice, let's talk about him as a person. Because before you take advice from someone, you need to ask yourself, who is this person and why should I trust them? Let's say you need medical advice. Would you ask a pilot? If you had a problem with cybersecurity, would you ask your cousin who's a farmer? Of course not. So when it comes to investing your hard-earned money, you want advice from someone who has actually done it. Someone who has built real wealth. Someone who has decades of experience, not just theories. And that person is Warren Buffett. So let's look at Buffett's life. He didn't inherit wealth. He didn't win the lottery. He didn't build a tech company like Apple or Amazon. No, he simply invested, and he did it better than anyone else in history. Buffett started investing when he was just 11 years old. By age 30, he was already a millionaire. By age 40, he was worth over $25 million. By age 50, he had $250 million. And today, at over 90 years old, he has a net worth of $130 billion. But here's what's amazing. Even though he's one of the richest men alive, he still lives humbly. He still lives in the same house he bought in 1958. He still drives a regular car. He still eats McDonald's for breakfast every day. Why? Because Buffett knows something that most people don't understand. Wealth is not about how much you spend. Wealth is about how much you keep and grow. If you ask Buffett what's the best way to invest, he doesn't give a complicated answer. He doesn't tell you to day trade. He doesn't tell you to buy crypto. He doesn't tell you to flip real estate. No, his answer is shockingly simple. He says, just buy the S&P 500 and never sell. That's it. That's the investment strategy that has beaten almost every professional investor for the past 50 years. It sounds too simple, right? But that's why most people ignore it. They assume that if it's this easy, it can't possibly work. But here's the truth. It works better than anything else. Because the S&P 500 is not one stock. It's 500 of the best companies in America. Instead of betting on one company, you're betting on America's economy. And over time, America's economy always grows. If one company fails, another takes its place. If there's a recession, the market recovers and grows even bigger. Over the last 100 years, the stock market has survived world wars, the Great Depression, the 2008 financial crisis, the COVID-19 crash, and yet it keeps going up. So now you understand why Warren Buffett recommends investing in the S&P 500. But if you're new to investing, you might still be wondering, what exactly is the S&P 500? Let me explain it in the simplest way possible. Imagine you could own a small piece of the 500 biggest and most successful companies in America. Companies like Apple, Google, Alphabet, Amazon, Microsoft, Coca-Cola, Tesla, McDonald's. These companies are already successful and profitable. They are the businesses that run America's economy. Now here's something interesting. The companies in the S&P 500 are not fixed. Every year, if a company fails or performs badly, it gets removed from the list, and a new, better company takes its place. This means the S&P 500 is always self-improving. It only includes the strongest companies in the country, and that's why it keeps growing. Because no matter what happens, the best companies survive and thrive. Now let's talk about performance. A lot of people ask, if I invest in the S&P 500, how much money can I actually make? The answer? It depends on how long you stay invested, but historically the S&P 500 has returned an average of 10% per year over the long term. That might not sound like much at first, but over time it compounds into a huge amount. Let's look at some real examples. Example 1, investing just $10,000. If you invested $10,000 into the S&P 500 in 1980, today that money would be worth over $1.3 million. Yes, you heard that right. A small $10,000 investment turned into over $1 million without doing anything. Example 2, investing monthly. Now let's say you don't have $10,000 up front, but you can invest $100 per month into the S&P 500. If you started doing this at age 25 and you continued until you were 65, you would have over $600,000 just from $100 per month. If you invested $500 per month, you would have over $3 million. And if you invested $1,000 per month, you would have over $7 million. This is the power of compound interest. Your money grows on top of itself, like a snowball rolling down a hill. And the earlier you start, the richer you get. Now you might be wondering, what if the market crashes? That brings us to the next chapter. A lot of people are afraid to invest because they've seen the stock market crash before. They remember 2008, they remember 2020 during the COVID-19 pandemic, and they think, what if I invest and lose all my money? That's a valid question, but let's look at the facts. The stock market has crashed many times, but here's what most people don't realize. It has always recovered. Let's go back in time. In 2008, during the financial crisis, the market crashed by over 50%. People panicked. They sold everything. They thought it was the end of the economy. But guess what? By 2013, the market had fully recovered and kept growing. In 2020, when COVID-19 hit, the market crashed by 34% in just a few weeks. Again, people panicked. They thought the world was ending. But guess what? By 2021, the market had fully recovered and hit new all-time highs. This happens every single time. The market goes up and down, but in the long run, it always moves up. That's why Buffett's advice is simple. The best time to invest was 20 years ago. The second best time is today. So if you're afraid of a market crash, just remember, the people who panic and sell lose money. The people who stay invested get rich. Now that you understand why the S&P 500 is the best investment for most people, let's talk about how to actually start investing. The process is simple. Open a brokerage account. Use platforms like Vanguard, Fidelity, Charles Schwab, or Robinhood. Search for an S&P 500 index fund. The best ones are Vanguard S&P 500 ETF, VOO, Fidelity 500 Index Fund, FXAIX, SPDR S&P 500 ETF, SPY. Start investing regularly, even if it's just $10 per week. Never panic sell, hold for the long term. That's it. This is the exact strategy that has made millions of people wealthy. A lot of beginners make the same mistakes when they start investing. Here are the biggest mistakes to avoid. Trying to time the market. Nobody can predict the best time to buy. Investing all your money at once. Instead, invest regularly. Selling when the market crashes. Crashes are temporary, but the market always recovers. Chasing the latest hot stocks. Stick to the S&P 500. Don't gamble. If you avoid these mistakes, you'll set yourself up for success. Let's recap. Most people overcomplicate investing, but the truth is, investing is simple. Warren Buffett, one of the richest investors in history, does not recommend stock picking. Instead, he recommends buying the S&P 500 and holding it for life. It's the easiest, safest, and most effective way to build wealth. Now, I want you to ask yourself, do you want to look back in 20 years and wish you had started investing sooner? Or do you want to take action today and set yourself up for financial freedom? The choice is yours. Here's your challenge. Open a brokerage account today. Start investing, even if it's just $10 per week. Never panic sell. Trust the process. This is how real wealth is built. Now, I have a question for you. Do you agree with Buffett's advice? Or do you think there's a better way to invest? Let me know in the comments, and if you found this helpful, hit the like button and subscribe for more investing tips. Your financial future starts today. Disclaimer, this video is for educational and informational purposes only. It is not financial advice. Always do your own research and consult a licensed financial professional before making any investment decisions.